conversation this week. This would be part 3 of 4 of How Self-Employed Canadians Buy Their First Home miniseries. You might have heard, as a self-employed Canadian, that it's hard to get a mortgage. I'm here to tell you that you might have heard wrong. Part 1 was about the struggles of what some self-employed people face and the myths about getting a mortgage. Part 2 was about having more safe and credible options available to you than just the banks. Today, part 3 of 4 is all about income, and mortgages are mostly all about income. It doesn't matter who you are, income is going to be a very important piece. However, sometimes when you're self-employed, some lenders have a hard time understanding how your income seems to keep coming in every day. Part 4, this is where I tie it all together and go over some struggles. I'm going to highlight a very important question that I hope you're going to think about. Before I get into that, I would like to take this moment to introduce myself. I help people find money so that they can finance their dreams. Maybe that dream is about buying a house or leveraging the equity in their home to make other dreams reality. My name is Juanita Heidebrecht. I'm an Ontario mortgage agent with Bricks Mortgage, a great supporting brokerage. You're actually one of the fastest growing brokerages in Canada. As a brokerage-based mortgage agent, I have access to many lenders, which means I have access to banks, credit unions, financial institutions, alternative lenders, B lenders, and private lenders. I'm the founder of Building My Wealth website and podcast, a resource of various financial industry professionals and experts dedicated on providing you with valuable information on how you can build your wealth. I'm also the founder of Wealth Building Divas, a ladies-only professional networking group in Ontario. And if that wasn't enough, I'm also a mom, avid reader, working on becoming a published author, crafter, and I love dogs. For today, we're going to focus on income because I'm telling you, mortgages are mostly about income. It was wonderful that you know your local bank manager really well, but long gone are the days when all you needed was a promise concluded with a firm handshake between the two of you. Nowadays, we have to show our work, so to speak. That path isn't going to be the same for everyone because everyone is unique. As we go along today, I want you to keep one question in mind, like one question in the back of your head, because I'm going to keep alluding to it in my conversation, and hopefully you'll be able to answer that question for yourself. Okay, here's the question. What's more important to you, your overall savings or having the lowest interest rate? Maybe for you, that answer is going to be both. That's wonderful. However, for most self-employed people, the answer to that question is going to be worth exploring. Let's talk about income. Let's say you want the lowest interest rate possible. This is what most people want, or at least strive for. If you are wanting the lowest interest rate possible, you're going to be looking at an insured mortgage. The nice thing with an insured mortgage is that you can provide a down payment lower than the standard 20% needed for a conventional mortgage. You can go as low as 5 or 10% down for a down payment. This might be a good time to point out that in an insured mortgage, someone has to pay the insurance premium. If you provide a down payment less than 20%, you will be paying the insurance premium plus tax. If the down payment is 20% and above, or above, the lender usually pays that. Being able to put down such a low payment sounds wonderful, and you have to pay for the insurance premium, but you also have to qualify for the mortgage. To qualify for an insured mortgage, besides requiring at least 5% down for the down payment, as we discussed, your credit score has to be 680 or above, and you need to show steady income for the last 2 years. Here's where things get interesting. If you provide yourself a T4, then things are really easy to calculate for the amount you need to get pre-approved for. However, if that's not enough, maybe we can look at some different options, like maybe a 50% gross up, maybe adding some of the expenses back. With an insured mortgage, numbers are going to be based mostly from your T1 generals or your T1 and 2T generals. For an insured mortgage, there isn't going to be a lot in the way of flexibility. You either qualify or you don't. Hang in there. Before we move on to having at least 20% of your down payment, I would like to address that question that might have popped up to you. Why can't we use an alternative lender if we have 10% down? I have seen alternative lenders offer mortgage programs that allow a down payment as low as 10%. That was a while ago, and I haven't seen them lately. That doesn't mean I won't see them again. Mortgage policies are constantly changing. My advice is to keep saving, keep going, checking in again when you're ready. Let's get back to it. Here's the thing. As a business owner, even if you're merely commission based, you bring in the money and you're going to be heavily taxed. If you manage to find yourself an awesome accountant, chances are you're not paying a lot in the way of taxes. Being able to write off everything and save lots of your own money from CRA is not conducive to being able to qualify for a mortgage. Not all hope is lost. If you're able to qualify based on your T1 general by grossing up your income a bit or by adding back some expenses, maybe that will be enough for you. However, for a lot of us, we need to be looking at different things, taking a look at our business accountant prepared financial statements from the past few years. Maybe we're looking at matching invoices and bank statements. For some self-employed individuals, you might be able to go back as recently as 6 months, which is great if you recently started your business. Some self-employed individuals might have to show documentations going back 3 years. Generally speaking, the more tax-related documents that you can use to establish your income, the more options you have and the cheaper it is to borrow money. Therefore, someone who's only able to show 6 months of invoices and bank statements is going to be paying more to borrow money for a while. If being able to borrow money cheaply the question is being able to borrow money cheaply the best overall savings for you? Let me go back to that original question for you, which is more important, having overall savings that includes paying all your taxes or having the lowest interest rate? Next Thursday, 2 p.m. LinkedIn Live, I'm going to be going over some examples to try to answer that question for you. Before I go, I want to quickly go over some other incomes that you might have that might be applicable to you, like Canada Child Benefit, mostly for children under 12, and there might be some exceptions for that. Pension, old age security, long-term disability, possibly an inheritance if there's a frequency in its payout. This is not a complete list by all means, but hopefully it gets you thinking about your situation and about your sources of income. Join me next Thursday, 2 p.m. live on LinkedIn. You're welcome to listen to this again on Building My Wealth podcast, available on your favorite listening service. Thank you for joining me. Have a wonderful day.